Okay, hey everybody, this is Brett with the weekend update here. I'll have a little fun here. I'm down at the beach in Fort Lauderdale. It's not the real beach, but big palm trees and beaches out to the my left here. So anyway, quick wave hello, and let's dive into it. Keep it fairly short here, but give you guys some indication of what we can expect here going into the weekend. So bear with me here. I'm just going to share my screen and we'll dive into it. All right, so that should work there and there. I'll turn off the camera and hopefully you guys can see my screen at this point. All right, let's dive in. So basically, Bitcoin here, not much going on. I've been saying this for weeks. Going through the end of September, currently, sort of through the end of August and into September, we wouldn't see a lot of action, and certainly we haven't seen that. I think things will start to pick up here maybe next week, but there's not a whole lot going on here. We can have a look at our 21-day and 50-day moving averages. So we briefly push up above the 21 to 50 here into this resistance area around 25,000 and then rejected back below. So what I'm calling your attention to is, when we are above the 21-day, the orange line, this is an exponential moving average, and the green line, the 50-day moving average, generally a good thing. But I did warn that we've had this fake out and breakdown in the past. So this is what we're saying. And to be honest, uh, the the range between 20,000 and 25,000, where we are at now, it's going to be a while potentially before we break out of that. And I was watching an interesting video the other day by Mr. Wonderful from the Shark Tank, and I think he's right. The big money on the sidelines, institutional money, the sovereign wealth funds that have trillions of dollars, they can't come into this market until there's regulation. It's too risky. But once we start to see some meaningful regulation in the US anyway, then that money on the sidelines will pour in massive numbers. So we want to stay vigilant and wait patiently and watch for this. Now, we still can make money in these markets and in these swing trade opportunities, buying on support and selling into resistance. So with that being said, where are we? Well, we're on a very important support line here, which still is technically a higher low from the recent lows back here around 17,000 in June of this year. So we are in a small uptrend. We want to be careful of this though, because we still could see another big leg down. All right, so we'll take a look at that here and in another chart, but let's just do that now actually. So in terms of the sort of bear flag pattern that we've been kind of keeping an eye on, let me do this. I'll turn off the EMAs here so that we don't have too much confusion on the charts here. So let's just do that right there and there. So basically, this bear flag that has been playing out since back here. This was a flagpole. This is the bear flag, and the break happened last week in August. So that would the measured move on that would put us down around 14,400. Okay, so I can put on our custom radar software here. It's sort of mixed, moderately up on the daily, but I don't know how long that will last in terms of not necessarily up in terms of price, but it's slightly bullish based on our stochastics RSI. However, on the 4-hour, the 1-hour, and the weekly, all bearish. So this is not a bullish scenario, and so the other thing that I can take a look at here, we should look at is the this early reversal indicator. So now that in contrast, we have an arrow here, two of them, showing that a short-term bounce is sort of possibly likely. Let me show you the look at the backdrop of the secondary indicator we do like to watch. So what's interesting here, let me get rid of this weird line here, that's volume decreasing. So volume's decent now. But on this here, our trend strength indicator is coming up above this 20 line. It hasn't quite gotten there yet. It tried here, rejected, and tried back. It's trying again right now. Generally, we will see some follow through, multi-day follow through on these. So it's quite possible we see a bounce here. Really hard to know going into the weekend. Let me have a look on my weekly chart. Not looking terribly bullish on a weekly. And so I would imagine we sort of drift sideways. It's hard to make a call on a bullish bearish scenario. And actually, Bitcoin is not getting the majority of money coming into this market right now. So that would be a good segue to pull up the chart of ETH dominance, because we've looked at this in the past few weeks. In contrast to Bitcoin dominance, which has been going lower and is now deeply into altcoin area. And money is not going into Bitcoin right now. There is money going into Ethereum ahead of the merge, and I've been saying that, suggesting that we would see a sell on the news type of event. Just to jump over this, so a little bit of news here on Barron's, basically saying forget Bitcoin, interest in Ether is booming ahead of the merge. So this is sort of the news of the day, and there's an article there if you want to go look it up. I have some concerns about the merge though, and so we'll go back to the chart here in a minute. But we're also, traders are watching for the U.S. jobs report to gauge the next Fed rate hike. So this we've got two potentially really dangerous market crushing news events. And so in terms of the merge with Ethereum, what could possibly go wrong, right? Well, a lot actually. And if you remember the Y2K fear mongering that turned out to be a big nothing burger, the fact that there's not more concern about this sort of leads me to wonder, is there a possibly big problem ahead of us? And there are always issues with merging these kind of things, and there's some minor rumblings of the miners aren't going to like it. They might hard fork Ethereum. I'm not really worried about that, but there's still confusion about, all right, let's say you have ERC generated NFTs for some time, they will reissue those. So if you're holding ETH, you'll basically have the NFT on the old chain and the new chain, and eventually one would become worthless, ostensibly. There's just there's things like this that haven't maybe fully been thought through and tested, despite the test merge last month. So I don't know. I'm cautious about that, and even if it works fine, I think it still could be a sell on the news type of event as we come into mid-September, when that Ethereum merge is supposed to happen. And I would be careful with that. Let's say we push up into this range, and then there is a, sorry about that, I clicked the wrong, accidentally clicked on that. So back to the Ethereum chart. Let me open this up here. So, I would expect that we'd push up into this upper range here, and I think what we'll see is some kind of a break higher, and it'll be a fake out. That'll be either on the 14th or 15th. Let's say they do the merge, and it's like, and they say, hey, great news, everything worked fine, and then people start buying in leverage longs, and then something happens, right? So that would certainly set up for a bigger drop down. And I'd love to pick up some Ethereum in the $1,000 range. But since this market is so precarious and is not looking bullish anytime very soon, I'm holding on to some powder here for this range back in here, where we saw some nice consolidation and buying accumulation back here. So these are the two areas I would be dollar cost averaging personally. Not financial advice, just education, of course. These areas where previously there was a lot of accumulation happening, and then we saw the distribution up at these higher levels. Sorry for all those lines there, give you a brain hernia. But so that's what I'm waiting and watching for and anticipating. So in that regard, again, we're seeing the money come into ETH dominance, which we have been seeing if we kind of zoom out here to a longer time frame. I have been seeing this happen and going on for quite some time. Let me zoom out a little bit so you can see this. We did look at it last week though, and so very interesting. Most people weren't seeing this, and the channels here, just loosely draw them. You got this on a way down for back in 2018 version, but then it flipped, didn't it? So we've seen this Ethereum thing moving higher, and this is sort of the channel here that is in a V shape. So let's see what happens. If everything goes smoothly, then certainly we could push up higher on ETH dominance and I don't know, potentially hit new highs, but up in this range, I would expect profit taking either way. Okay, so with that in mind, we've looked at Bitcoin, we've looked at ETH and ETH dominance, etc. Let's take a quick look at our USDT chart and see where is money flowing in and out of. So let's see if I can clean this up for you guys a bit. I don't think we need that one. So what we have here, we're hitting resistance on the USDT. So we've seen money coming into USDT, sort of cautious in the markets, hitting a bit of a resistance level. So could we see a pullback and minor rally in Bitcoin, Ethereum? Sure. But as sort of in line with what I've been saying, if this comes down and Bitcoin goes up and then this bounces, then Bitcoin and crypto have a much deeper leg down. So I do think that's what we're looking at here in the September. Traditionally has been a bearish month for Bitcoin. Let's look at the dollar index here. Also a inverse relationship. And so the DXY, notice this, and I had drawn this area a while ago, back when we were lower, and sure enough, we have pushed higher into that range. let me get rid of this circle and just sort of redraw this. What it is a giant head and shoulders, actually. And so the fact that we're pushing higher, we're pushing, the dollar is getting stronger in comparison to other currencies in the world, which are doing terribly. I think that also that with the midterms coming up, the U.S. administration is keeping the dollar strong, and as long as they can, and will prop that up by any means necessary. So without putting on my tin hat, the Fed has been saying one thing and doing another. They've been saying they would reduce their balance sheet by billions of dollars by September, October, so, and they just haven't been doing that yet. So there's some speculation that they're going to kind of tiptoe around that past the midterms here in November, so the administration can say all their, manufactured, or let's say maybe not manipulated, but the spin on it will be positive. Let's say that. And then after the elections and voting is done, then the real trouble begins with higher interest rates, etc. So back to this fear of higher interest rates hikes. Let's say they come in at 50 basis points. They really need to be at 75 basis points, and that would take the market lower. But Powell did say on his most recent comments that prepare for more pain. Question is when. If we do get a full point rate hike in September, markets will crater. I mean, that'll be the pain. But again, I think they're going to prop it up here into November, or maybe there's a little bit of pain now and then they make it less next month ahead of the votes and midterms. So we want to keep that in mind. It's a good time to be cautious still, but good times will come back again. Here again, this cup and handle on ETH, the DXY, pardon me. And the handle is breaking, so the dollar index should push higher, and I would anticipate we come up into this 118, 119 zones where I have my alerts. Pullback from that would be a boost for crypto and Bitcoin. However, in the longer scheme of things, I remain bearish, and I think the dollar could push up much higher into these areas here. So what I'm going to do is actually set another alert. Here it is, $150 range. So I'll just do that because, as this pushes higher, crypto's coming down. Right? Keep in mind that inverse relationship. And so if we do hop back into the longer time frames, I'm going to go to Bitcoin, back to Bitcoin here. We've been watching the 3 prior cycle charts here. So what we just saw, though, and I do want to call your attention to, was waiting for the end of the month candle. And so we had that till Wednesday. And so what is slightly positive is that this was not a bearish engulfing candle. Just barely missed it, but my line in the sand was right around 19,800. And the Bitcoin bulls and the whales know that. So there was a big battle, and still is, battle for 20,000. So had this been a bearish engulfing candle, had we closed down below the low of this last month's candle, or the opening the low last month, that would have been decidedly bearish. So, we're coming down now. The thing is, these two combined currently, the fact that currently we're below this is bearish. So, this is, we are not out of the woods. So anyone looking to jump back into these markets, I would highly recommend advise caution in doing that, as I think we still have lower lows. We could head down into these 12,500 range. Some people are saying 14,000. I don't know. There's various reasons for that. The measured move on the bear flag, but I want to jump back over into our weekly here in a moment. But real quick look at some of this. Not much to see here on these other indicators with the RSI. Let's look at the weekly. So since we have clearly broken down below the 200-week moving average, the 300-week moving average, which when it went all the way back to 2020, that was the support for the bounce back in March 2020. So this is drawn to scale. But it came right down here on the 300-week. So I think that is. Let's see what I do there. I seem to have buggered that a little bit. Let me redraw my pivot. Sorry about that, guys. Go back again. I got this. Why did I do that? No big deal. Yeah, whatever. So this is the bottom, or it's the bottom for the 2020 bounce. So I think that 300-week moving average is going to hold and ultimately continue on out this way. So point is, this would put us down around 18,000. So we've got some more downside, I believe, and possibly even down to things get really nasty down in these ranges. A big accumulation zone back here in 2020, and that would put us at the 400-week moving average. Guys, I think there's more downside in this market, so keep that in mind, and I'll redraw this here for next week. Okay, so with that, let's take a look at something else here. This slope is a bit too high, actually, so I will bring that down, but disregard the end of the arrow. You get the idea. And so also what do we see? We've got a bearish ERI. That's our custom indicator there, the red arrow. So we saw that a couple of weeks ago. And the other thing that I want to look at, I'll just turn that off, is this trend strike indicator is rejecting that. I drew this previously, and this was what I was fearful of, that we would roll over from here. Another signal, a clue we're heading lower. And then in this case here with the stochastics RSI, similarly rolling off of this. So we're not seeing any divergences that would indicate that we're going higher. This, let's see, has been going lower. These have been going lower. All right, have a quick look at the RSI. Rejecting off of this downward trend line here, which is also significant and important. So, nothing terribly bullish on this. These scenarios, we want to keep an eye out for all of this. Let's take a quick look at any notable movers in terms of things that are moving. Actually, let me jump to Bitcoin on a shorter time frame before we do that. So this is the likely two scenarios here on Bitcoin, and this was from a couple weeks or a couple days ago. So this I would draw out here. They're sort of similar scenarios here. So what do we see? The yesterday's up candle on the 4-hour, I was saying if we break above that in my other groups here, that we would likely hit resistance in this area and then start to head lower. Well, we didn't even get that far. We were selling off heavy today, currently at around 19,780. So we're, this is, well, I don't know, it's like another bear flag on the 1-hour chart, right? So we wanted to take a quick look at that here. Where would that put us here? Oops. All right, thought that would help clean things up a bit. And but so far, this scenario had played out exactly as I drew it. Let's draw this rest of this bear flag. But I'll do it so you can see it a little more clearly. Parallel channels like that. Close. Okay, so have we broken the bear flag? Debatable. So if we draw this on the lows of, it would depend on how this 4-hour closes, right? Because these tails here came back up. So the point though is on a break below that, I'll take this one off, or this would be our measured move on the bear flag. And by cloning that and drawing it down here on a break would put us down around that $18,000 range that I was suggesting. So, that would be that 300-week moving average, which I've loosely drawn here. And yeah, so that's kind of that's what's in the cards potentially. So let's see. So from this scenario where we didn't quite push up higher, I guess what I'll do is I'll move that, or we could delete that so it's not so complicated. The likely scenario here, they sort of overlap a bit. So this is what I'd be looking for here. Is this kind of a slow bleed lower? Maybe not so slow though. We've got this thing's kind of coming down here. Maybe it pops up, tries again, comes down to that 18, 19,000, maybe a little bit of support here, but sorry, that's not going to be. I ran out of mouse space. We need to draw that straight up. So let's see if we can erase that a little bit. I don't know if I can erase this here. Doesn't look like it. So with that in mind, that would be probably more like this. And sort of big unknowns here, guys. So let me just take that off. We don't know what we're going to see here. I think that likely head lower, and then we'll go from there. Okay. All right. Let's see. I'll just clean that up a little bit. And certainly, guys, if you have any questions, please put those in the comments, and like and subscribe to the channel, so that if you like this content, please do that, and we'll be sure to get more of that out to you. Okay. So let's go back to our daily chart. This is the weekly. We talked about that, and on the charts of some of these coins here, there was a little bit of action on Matic yesterday, so everything was mostly down. Polygon was looking interesting, and let's see, but it's sort of selling off a little bit here, but I don't see anything that's really up here today. Let me get back to the daily here for you guys. And so, Polygon had a little bit of a push higher. Let me turn back on these 2150 Moving averages, though, these are a good close in terms of what we might be seeing. So what I do like about Polygon here is it's sitting right above its 21 and 50-day moving averages. Now, it certainly could break down again with the rest of the market. Bitcoin is our North Star, and so keep an eye on this. Always use tight stop losses if you're going to be trading any of these, but in comparison, it's looked stronger than many of these. Actually, don't look at Luna, sorry about that. You know, I don't see much really worth keeping an eye on with these. These are just some of the ones I'm watching. So, you know, guys, it's a good time to be patient and stay on the sidelines and wait for our ideal buying opportunities. So I'll jump back out of this and we can see if there's anything we missed. Let's look at, sorry, quick look at the total market cap. Okay, so we're back down below $1 trillion where we were hovering right in here. So similarly on the 2150-day moving averages, when we broke down below it and tried to hold here, this is a bit ominous, guys, and this is also another bear flag potentially. So these things have been playing out. So I don't want you to think I have a one tool in my toolbox, because if all you have is a hammer, then everything looks like a nail. Is that right? But these have been playing out, so we want to pay attention to these. And this is a sort of tried and true kind of an indicator. Now, the real way to draw these is sort of like this. So that puts us on the market cap once we break down below it right around 600 to 700 billion. And so that would be obviously quite a bit lower from here. And all the way, I have some notes to myself. Possible Bitcoin bottom down in the $500 billion range. That's just pure speculation. I don't know. But this is certainly bearish here. So we want to keep an eye on this right here. A lot of overhead sort of resistance with the 21 and the 50. I don't know why it's so thick, but you get the idea. The 21 and the 50 resistance, this support line in the bear flag, now resistance. We're putting into lower highs. This looks pretty bad, guys. So I would keep your powder dry myself and look for the bargains and take this time to outline the areas where you would be a buyer, like be a buyer, if we can see any of these things down, hit these levels. Okay. So with that, you guys, I guess I had the camera on the whole time. I thought I turned it off. So apologies there. And I'm still sharing my screen, looks like. So anyway, didn't realize I had that on, but hopefully that helped and make sense for you guys. So I guess I'll switch back over to here. And where's my tropical? No, there it is. I'm still in the tropics. Well, as soon as we're done here, I'm heading a couple hundred yards that way down to the beaches in Fort Lauderdale, enjoying the last a little bits of summer. But hope you enjoyed, and you guys take care.